Good afternoon, ladies and gentlemen. It gives me much pleasure to welcome you to this Bowmans Uganda webinar. This webinar is entitled Tax Developments and What They May Mean for Business in Uganda. Thank you so much for taking time to register and attend the same. I am Daniel Gantungo, a partner in the corporate department of the firm, and I'll be your host this afternoon for the next 1 hour. With me is Mr. Ernest Wiltshire. He's the office managing partner of the firm, and Mr. Ronald Kalema, the head of tax for our firm. Those two gentlemen are going to take you for the next 1 hour over this topic, and I trust they will do justice to it. Before we go on, I'd like to give you a few guides. You will shortly receive a poll on your screens. Kindly assist us in responding to it. It helps us to improve our offering to you in such webinars and series. Also, kindly use the Q&A in case you have any queries you'd like us to answer. We will try as much as possible to go over them and respond to them as we go along. We shall also have some time at the end of this to respond to those queries. This webinar is divided up into two parts. One part will be taken by Ronald, and the other will be taken by Ernest. This webinar will discuss mainly three topics. The first one will be a review of the key, or what we think are key 2020 tax amendments. Then we will look at dealing with compliance and enforcement measures, and also compliance in a time of hardship, such as this of COVID-19. Without further ado, I'd like to invite Ronald to take us through the first part of this webinar. Ronald, please welcome.
Thank you very much, Daniel. Once again, I welcome everyone. Thank you very much for joining us as we look at the latest developments on the tax front. It is a pleasure, and thank you for your time. We have an old saying within tax circles that there are two things that are certain in this life, and that is death and taxes. And even in this time of COVID, that saying, that very old saying, remains very true. Even in a time of pandemic, taxes must be paid. They are like the lifeblood of our government. Now, the challenge we have, and mostly for our friends at the Uganda Revenue Authority, for whom we work to develop Uganda together, is meeting the target that is given to them by the government. Just today, we saw the press reports that came out that for the first 3 quarters, they had a revenue shortfall of 1.4 trillion. Let us recall that their budget was $20.4 trillion for this financial year that is going to end in June, on June 30th. The projected revenue on which the budget for the next financial year is predicated was 21.5 trillion. And this was in the budget framework paper released in December, of course, before COVID. In light of everything that is happening, in light of COVID, in light of the economic hardship, how is URA going to meet this budget? That is the key question. Of course, there are some key developments there. And one of them is the focus. They have been focusing on improving processes expanding the registrar as well as reducing tax areas. Tax areas means these are taxes they already assessed, but taxpayers have not yet paid them. The tax register is very key because it involves expanding the tax base to cover people who are previously not paying taxes, especially the informal sector that constitutes about 51% of our economy now. And of course, we know at the beginning of March, there were major changes in URA administration. We have a new Commissioner General. We have a new Commissioner for Domestic Taxes. We have a new Commissioner for Customs. And all those changes must have a bearing in light of the target that URA is going to be given, and in light of how interaction between URA and the tax-paying public is going to be in the next financial year. Tax policy generally is used to achieve mainly two things, can be used to achieve two things. One, achieve the revenue target, mobilize revenue for the government, and two, stimulate the economy. In March, the government tabled bills in Parliament. And you will notice from what I'm going to present is that most of the proposals were whittled down because they honestly could not be justified in a time of economic crisis that we are facing now. Some of the key proposals that were dropped will include the proposed taxes on transfer of land, limitation on claiming of input for people in real estate, and things like that. When we look at the laws that actually were passed by Parliament, remember at this stage now, the laws were passed by Parliament, they're yet to be assented to by the President. The President must assent to these laws before 1st July 2020 for them to come into force. Let us look at whether they will achieve these two key objectives in terms of stimulating the economy as well as mobilizing revenue to the tune of 21.5 trillion. Can you go to the next slide, please? And a good place to start would be income tax. When you look at the changes that came out of the income tax bill that has been sent to the President, you will notice that most of them are actually reliefs that the government is proposing to encourage people to invest into the economy, and a few closing of the compliance gaps that exist. One of the key ones has been exempting investors, giving 10-year exemptions for investors who put their money in industrial parks and free trade zones for key selected sectors of the economy. For example, agri processing, manufacturers, IT, as you can see listed there on the slide, people who are in logistics and warehousing, and commercial farming. Essentially, what the amendment says is that if you have an investment and you're a citizen, and you have an investment of $300,000, then you qualify for a 10-year investment for the income you generate from that investment. If you put your investment up country, the requirement is even lower to $150,000. So that is very important to note. There is also a new regime for small taxpayers, particularly if you have records, for example, and your annual turnover is about 150 million, you pay about 900,000. If you don't have records, the tax is slightly higher, essentially to encourage small taxpayers to keep business records. We also see one of the key changes is introduction of withholding tax on insurance agents and advertising agents. This has been a long-running dispute, legal dispute in the courts between URA and the agents. URA previously claimed that these agents were actually employees and was demanding pay as you earn. The agents went to court and actually won, but now this makes that position quite clear. They have also introduced e-invoicing. in terms of claiming a deduction, if you actually want to claim any expense for purposes of income tax, and you incur this expense with a person who is authorized to use an e-invoice, you must have that e-invoice. So when you look at these changes, particularly for income tax, they are again mainly meant to give relief. We can also see there for our friends in finance, exempting of income of the Deposit Protection Fund and the Islamic Development Bank. Next slide, please. Let us quickly go through VAT, and then we look at generally what the amendments could mean for your business. For value-added tax, people in manufacturing have been given a 12-month allowance to claim input before they actually start operations, which is very welcome. And then VAT exemptions to all those strategic investments that we have talked about in my previous slide. And then the government is also introducing new exemptions. You will notice that agriculture still features very prominently. Key agricultural equipment, processed milk, cotton seed cake, IT, royalties and software used in agriculture, telemedical services. Key to note is also people who have hotels and lodges upcountry. All their supplies are now VAT exempt. So you can clearly see that there is a focus on manufacturing, agriculture, information technology. That is where the exemptions are going. Of course, there is also an exemption that is new for people in oil and gas, which is liquefied gas. And then the same requirement for e-invoicing still resurfaces in terms of claiming input VAT. When you go down to stamp duty, you will notice a very key introduction of an exemption for loans. If you want to go and get an equitable mortgage from a bank, the stamp duty has been removed, essentially to lower the cost of borrowing and push money into the economy. The same for further charge and any instrument for any loan and debenture. When you look at this amendment clearly, it does not talk of a legal mortgage, which is the instrument that is common and popular with commercial banks. We could argue that it would fall into any loan instrument above 3 million, but that is a technical argument we can have for another day. What can be said is that this is very welcome because it will lower the cost of borrowing and push more money into the economy. And of course, professionals, lawyers, accountants, and other people who require practicing licenses will pay 100,000. I don't know how much revenue this will generate, but I do not have too many arguments about it. Next slide, Dan. In terms of excise duty, when you look back on the bills, you can see that a lot of the proposed increases did not make it into the final law. The increases have been limited to just 5 items, which is the spirits, the fruit juice, the gasoline, and then sacks and bags, as you can see down there. Some of them may actually amount to decreases. So overall, when you look at these changes, you will notice that the government has tried to limit increase in taxes. But is it enough? When you look at the target that URA has been given, and these changes, are they enough to achieve that revenue target? That is the key question. When you look at the press releases that have been coming out, everybody is saying taxes have to go down. We have to lower taxes to stimulate the economy. People don't have money to spend. And then we have comparisons with our brothers in Kenya who actually have a reduction in the tax rates for pay as you earn, for VAT. The VAT rate, which was 16%, is now reduced to 14%, so that people actually have cash to spend to the economy, to push into the economy, aside from borrowing and government expenditure. So my take on the new changes is that you will see the focus is on the big investors. The ordinary taxpayer, the employee, the guy who is down there, it is likely to remain business as usual. And business cannot be as usual when the economy is projected to shrink by about 24% in the next financial year. So that means that there's likely to be challenges, one, in achieving the revenue target, and two, there's likely to be more friction between taxpayers and URA inevitably, because there is a revenue pressure, and then of course there is the COVID, the pandemic that is facing everybody indiscriminately. So what should you do as a business? Because remember that URA effectively owns, or the government effectively owns 30% of your business. In some cases even higher, which means you must take them as your partners, your key shareholders. And it is important to know how to interact with them and what to do when you're interacting with URA as a partner, but of course also as a tax collector whose duty is to collect as much as possible, contrasted with your duty to pay only the taxes that are legally allowable. So my colleague Ernest is going to talk us through what you need to do, how you can navigate that space, and how you can be assisted. Thank you very much for listening to me.
Thank you very much, Ronald. I can see questions are on. Please send the questions. Keep them coming. And I would want Ernest to first finish because some of these questions may be answered by his presentation before we go over them. Ernest, you are welcome to take over.
Thank you, Daniel, and thank you, Ronald, for your presentation. A very good afternoon to everyone who is attending, and thank you for honoring our invitation to attend this webinar and engage with us in an area that is topical and critical for all of us. I think post-lockdown, this area will even be more critical. Bowmans Uganda, also AF Mpanga Advocates, has been a thought leader and leading legal services provider for many years. And we've serviced and continue to service various types of clients to whom we are grateful and with a lot of humility. And in doing so, we have built significant capacity in various areas of the law, and they have a fully functional tax department, which Ronald, who just spoke to you, heads. The area that I wish to focus on this afternoon is relief from enforcement and things that might help with business continuity. We all know and we understand, I believe, that governments all over the world must mobilize revenue for various priorities and for the provision of services. And it targets those, for this effort, this revenue mobilization effort, it targets those who reside within their jurisdictions, as well as those who do business within those jurisdictions. But in the case of Uganda, income is generally taxable regardless of where it was generated, so long as one is resident. And the sources, therefore, of revenue, will look inward, domestic mobilization, but also look outward, so external activities and external mobilization. What is therefore certain is that you will pay taxes. I mean, that one we can't debate at all. So long as you engage in any form of activity that the law prescribes as taxable, you will pay taxes. And we also know that the way taxes are levied and the rights that are granted to taxpayer in this area show the government policy towards resource mobilization. You just heard from my colleague the numbers, which are fairly large, and therefore the policy is to collect more. But we also know that annually, through proposals to the amendment of laws, one is able to see what the government is going to focus on for the following financial year. I believe that many plans were made by the finance ministry long before COVID showed up, but now it has brought all sorts of problems. The immediate problems that we all are living with now are the lockdown. So many business activities were not considered essential for purposes of the lockdown, and therefore they closed. With no commercial activity being conducted, there's very little income or no income at all flowing into these businesses. And the consequence, as we can guess, is to have severe cash flow constraints. That means you become unable to meet obligations as and when they fall due. And in the tax world, the obligations are generally twofold. So you have obligations to report or file returns, and then you have obligations to pay that which is contained in the returns that you have filed. So, like Ronald said, pandemic or no pandemic, these obligations are not going anywhere. They remain with us. They will remain with us for the foreseeable future. Now, although many businesses were not considered essential services for purposes of the lockdown and the exemptions that were granted there, as far as the tax collector is concerned, in my view, all businesses are essential. So every shilling counts, every source is critical, every contribution is necessary, and therefore one can say there will be no letting up on the expectations that the Revenue Authority has in terms of collections. And from the perspective of the taxpayer, taxes are a cost to the business because they get money out of the business. And then from the perspective of the tax authority, they are the only legal source of income from which the authority can collect money. So regardless of the perspective from which you look at this, cash is king for both sides. And therefore, one must think very carefully about how to approach a situation where cash is not readily available. I would say that at the top of every business's priorities right now, and I expect this to be true, and post-lockdown is really survival. It is to be able to continue with business, pick up whatever pieces are still available, and reignite the engine and start again. But you see, when survival mode sets in, people begin to prioritize, things differently. So you have seen business owners that have engaged in downsizing. For example, hotels. You've seen people who are being paid a fraction of what they were earning before COVID, and so on. It's really a question of prioritization for purposes of survival. All these things, I think, are aimed at ensuring that there is cash preserved or that there is cash prioritized in terms of what is required, so that whatever little is available can be used perhaps as a springboard to promote the recovery effort for commercial activity. So it's reasonable to presume, therefore, that tax obligations might not be on the priority list for many tax collectors. But the opposite is also true. Tax collection is the top priority for the tax collector. So what solutions do we have? What solutions must we be thinking about in order to bridge this gap? Now, to take you a little back, and maybe to just re-emphasize what my colleague said, from the amendments that the government introduced to the tax legislation earlier, the priority and the thrust appear to be increase of tax collection. So there are various things that were mooted as areas where the basket could be increased, so that they could collect more, meet these targets, and be able to deliver more of the services. Thankfully, and one might say thankfully with some caution, depends on where you are looking at it from, many of these things were not passed by Parliament, they were not accepted. But then from what Parliament approved, the priority areas clearly are investment, incentivization, perhaps the drive towards import substitution. So this suggests that taxpayers who cannot benefit from this kind of investment promotion policies have to navigate their relationship with the taxpayer based on existing legislation and the realities that we have. Therefore, COVID or no COVID, the legal obligation for filing and the legal obligation for paying taxes remains. We know that both these obligations can be met electronically, but the critical problem is that for the latter, the obligation to pay taxes, you need to have cash available, but in light of very little commercial activity, that cash is not readily available for some, or will not be readily available for some. So knowledge about what to do in these kinds of circumstances is, in our view, critical to enable you to continue, to enable you to survive as a business. And I think it has been widely said, and I think it's a common view shared by many economists and perhaps business people, that survival and continuity is really the key, and perhaps realistically is the only target that businesses should have this year. So what solutions exist in terms of our relationships as taxpayers with the tax authorities? We've divided these solutions, next slide please, Dan. We've divided these solutions into two broad areas, solutions that are inter-party solutions, and then solutions that are external to the parties. But both of these are premised within the existing law. They have not come out of any amendments, so you're dealing with existing law as it is. So inter-party solutions, really we are talking about how you can relate with the tax authority together, you and the tax authority, without necessarily involving a third party. And these include things like deferral and remission and installment payments and so on. Deferral, there is in the law permission for you to seek deferral for the filing of returns, for payment of the taxes that are due, or to be able to pay in small amounts. And you need to take advantage, you need to think about taking advantage of some of these available rights. There is also the question of remission, where you can ask the tax authority, because it has power to do so, to give you relief, especially in cases of undue hardship. Now that relief is not likely to be on the principal tax, but perhaps more on the penalties or the interest that comes when you haven't complied in declaring or paying the principal tax. So remission is another of those solutions that's available, that one needs to think about and say, if I go and self-declare, if I go and volunteer information about my non-compliance, perhaps I'll be forgiven, for lack of a better word, of the penalties and the interest that would otherwise have been applied and made and that would make the tax payable really, really big. But you can also get into installment payments. This is for taxes that are due, that you know are due, and you can agree to have some regular remittances done, agree with the URA to have these remittances done in installments. But you see, all these things need you to engage with the URA. Lastly, within the context of inter-parties solutions, where you have assessments that have been made and you are not comfortable with them, you do not agree with them, you object to them, the tax authority has an appeals and objections unit that would listen to those objections and make decisions about them. So really, as a rule of thumb, you need to start by exploring and exhausting what the law provides as the first point of engagement. So these internal processes within the law must be tapped into as a matter of priority. They are available, so don't ignore them. If you haven't filed returns or paid what is due, or are facing demands or fear that perhaps you will face demands, you need to engage a person that is knowledgeable in this area, perhaps a tax lawyer, perhaps an accountant, an auditor, and so on, to assist you to navigate the landscape, because it can be quite complex. But you see, when you know, because you've engaged somebody who knows, presumably you then also learn, so you know, when you know, in my view, you make correct decisions. And when you begin to make correct decisions, you are halfway through solving the problems. So if faced with claims or demands, do not think of litigation first. Litigation should not really be the priority that you are looking at. It's time consuming, it's expensive frequently, it can be unpredictable and so on. But because these processes exist, once you have understood them, begin to use them. Put your objections in writing. Don't make a phone call, don't send an SMS or a WhatsApp, or use media that can allow you to have a record of these objections. Observe the time limits. This is why you need to engage people who know what is required, because if you don't abide by the time limits permitted, you could lose some of these rights and these options cease to be available. So engage these authorities, explain the situation and your status. Do not hide. Do not assume that things will resolve themselves, because honestly, consequences can be dire if URA decides to apply the powers that it enjoys by statute. So set up meetings or series of meetings, be open, be transparent. Frequently, things may not end as badly as you might initially think or fear. If you are not satisfied with those meetings, then you can move things to the other options that are available. Just a small note on the appeals and objections unit. They will listen to you. That's the experience that I've had for the majority of cases. But when they make decisions, those decisions are binding on you. Now, some of you may have been aware of publications by the Revenue Authority in the media last month, I believe it was, or end of March, where they, gave some indication that they were recognizing difficulties that taxpayers might be facing with the filing of returns and with the complying with installment arrangements that were in existence, and so on. But those guidelines, although they were very, very welcome at the time, were limited to, I think, the 30th of April. So as we speak now, we appear to be back in the position as if those guidelines had not been issued. Those guidelines allowed some time for taxpayers to file late and to pay late. So the URA may need to provide fresh guidelines to be able to extend some of these positions that they had advanced to the advantage of a taxpayer. So during this time, because of the physical inability to attend places, you really must focus on electronic engagements so that you are able to at least put your case forward. Social distancing will not allow you to attend as many meetings as you want face-to-face, but at least electronic engagements are possible. So that's the first solution that you need to think about, the inter-parties solutions that are available before you think about externalizing. Now we will move quickly to the second solution, which are the external party solutions. Again, as I said, these are solutions that are available in the law, and they involve going to, first of all, the Tax Appeals Tribunal. And if you are dissatisfied with that, appealing further to the High Court of Uganda. The Tax Appeals Tribunal process is designed to be fairly informal, but in fact, you may need to rely on a person who is knowledgeable in the tax area, because there are rules about when to file, there are time limits there are rules about what to file, there are rules about when to serve, there are rules, more importantly, about the requirement to deposit 30% of the tax in dispute, or the amount which is not in dispute, whichever is higher. So right there, even as you take that step, there is a cash flow element that one must face immediately. So if the choice is to go to the external parties, then object to the decision by the tax authority and take it to the Tax Appeals Tribunal. By and large, I can say that the experiences we've had, that the URA staff are professional, and really they will not hold it against you, that you chose to go to the tribunal. They may not applaud you for doing it, but they will not hold it against you. And frequently in communications that they give to taxpayers, they do remind taxpayers of this option. Of course, the option gives them a certain advantage because while the dispute is ongoing, you will have that 30% that has to be paid. The appeals tribunal itself is independent and has issued landmark decisions both for and against URA, for and against taxpayers. So at least you are sure that when you go there, you will be listened to in an objective manner. From matters that we've dealt with there, dealing with corporate income tax, excise duty, customs, and so on, we have come to the conclusion that there's fairness there, that you'll be listened to as the law requires you to be, and your objection will be handled professionally. It is designed, as I say, to be stakeholder friendly, but you must also be very careful about the objection that you put forward, because objections can be based on facts that you have a dispute about, or they can be based on disputes around the interpretation of tax laws. So as a taxpayer who is not represented, the navigation of disputes around facts may be quite easy for you. But where you have a dispute around the interpretation of tax law, it may be difficult for you, and you may require a trained person to be able to help you to navigate that process. Please be reminded that the Tax Appeals Tribunal process now permits mediation, which is a very good thing, because even in the context of a live dispute that you want adjudicated, parties now have an opportunity to consider the dispute together with a third party and discuss it and perhaps amicably resolve it. If that mediation effort is not successful, then a trial before TAT is inevitable, and you must therefore prepare for that, and then the TAT decision will conclude the matter. If you are unhappy with the TAT decision, that's not the end of the journey. You still have a right to appeal to the High Court of Uganda. Previously, a decision from the High Court of Uganda on appeal could also be appealed to the Court of Appeal, but now there is some difference of opinion because there are apparently contradictory cases coming out of the Court of Appeal as to whether you can proceed to the Court of Appeal after the High Court or not. So that is an area that needs to be resolved. TAT is a 3-person tribunal. The High Court is a 1-person, tribunal, but hearing an appeal from the Tax Appeals Tribunal. As I wind up, please remember that URA's collection mandate remains at all times, but only for taxes which are due. Therefore, the first and, in my opinion, the best option is always to remain compliant. And the idea really being that prevention is better than cure. Failure to comply, invites audits, it attracts interest and penalties, and a bad situation is exacerbated. Compliance, on the other hand, is what I would call an amelioration technique, even during this time. If you can comply, you are halfway there. If you don't comply, you are at 100% non-compliance. So at least file the returns, even if you're not making payments, because that is at least half of the journey. However, if at the start of this COVID-19 pandemic and the lockdown, you were non-compliant, the truth is the problems are likely to become bigger for you. Remember also that URA has at its disposal various powers, including powers to forcefully receive the tax from third parties. You've heard about agency notices. So you must remain alert in all circumstances, but you must avoid putting yourself in a position where the authority has to resort to those powers, because once they exercise them, it's a fairly difficult place to come out of. In summary, therefore, in terms of the solutions, I would say to you that it is always better to try and fail, but never fail to try. If you fail, you are in no worse situation than when you started. If you succeed, on the other hand, then your efforts, paid off and you moved to a better position. And remember, as I close, that you can always reach out to us for guidance. Thank you very much for listening to me.
Thank you very much, Ernest, for that wonderful presentation, and Ronald. We have a few queries which have come in. Please keep your questions coming in. I think I will go through them and request Ronald can answer this first query. The query states that, let me read it as it is, that we had a query with URA prior to COVID-19 regarding an objection of an assessment. They were to get back to us. Then came the lockdown. On 14th April, they sent an objection to our appeal. We were given 45 days to appeal to TAT or the High Court. But we're in a lockdown, have no access to any information. What is our recourse? So Ronald, you can have a go, I think.
Thank you, Daniel. Unfortunately, this has been happening a lot. As you know, amidst the lockdown, URA remained open. It was a public direction from the president. So even though you cannot access them at URA towers, they remain working. So they can still issue assessments, demands, even objection decisions. And they have issued quite a number during the period of the lockdown. The other thing I'd like to point out on this query, which is normally misleading, is when you read the objection decision, they tell you that you have 45 days to appeal. But currently, the law actually gives you only 30. So you should take note of that. You have 30 days to appeal to the tribunal. What I can say is that the tribunal is open, but if you do not have access to your information to file or to actually log an objection or an appeal, first thing is you engage URA and inform them of this status. This you can do on email. You can contact them on email and inform them of this status. That buys you some time. Then two, if they are not listening, you still have an option to go to the tribunal. As Ernest has noted, the tribunal has powers to extend the time within which you can lodge an appeal, or within which you can pay. So all the powers given to the commissioner are subject to review by the tribunal. So in your case, if you are in the lockdown and you fear that time may run out on you, I would advise you first and foremost, contact URA, tell them you're in a lockdown, you cannot therefore attend to the timelines as stipulated within the law. If you do not get a response, then perhaps you may think about approaching the tribunal. Remember that during this time of lockdown, the tribunal is not hearing cases, but the registry is open, so you can get interim relief from them.
Okay. Maybe to follow up, probably he would have such a query. How long should such a person wait for URA to respond to him, to his letter?
So that's a difficult one, because as you know, for a letter like that, there are no statutory time limits. So, but we should expect a reasonably fast response. My experience has been that they respond within days. During this time, they have been responding. So you should expect a response within a few days. And if you don't, then you can follow up with phone calls, but they generally have been responding to such requests on time.
Okay. Okay. All right. Thank you.
And I think just to add something, Dan, to that question, it's important that you do this, as I said, formally, because should you find yourself on the wrong side of time limits, you may need to demonstrate that you took steps that were necessary to keep you within the time limits. So if you sat back and did nothing, did not engage with URA, did not try and contact them or get some solution from them, the hurdle becomes a bit higher for you when you seek extension of time or enlargement of time.
Okay, thank you. The second query, still I think related, it says that according to the law, filing and paying remain and can be done electronically. Our business closed as a result of the lockdown. We have no access to our records and thus cannot even file, like VAT. Even the payment, some of us cannot easily pay because of our platform, on top of not knowing what our due amounts are. Our month in question is March 2020. So in such a situation, the person has no access to records to even file the required returns.
Actually, Daniel, that is a big challenge to most taxpayers, and that's why some people have been saying that the extension or the relief measures given by URA are actually of face value. We know that payment and filing are two separate systems. You can file without paying, and you can actually pay without filing. But in order for you to pay, you first need to know how much you are going to pay by filing an actual return. So if URA tells you that you can file your return in 3 months, but pay me now, and you don't know what to pay, essentially the extension of the return does not help you from a business perspective. But as Ernest noted, you can still apply for extension of payment, but you must do this separately and by letter in writing. So if you do not have access to your records and therefore you cannot determine your tax due, please, again, engage URA, preferably before the deadline.
Okay.
And ask them, inform them of what is happening, ask them to extend the time of payment, and then you see what the response will be. Right? If you just don't sit back, the next thing you will see is an estimated assessment. If you just sit back and wait for them.
Okay, thank you. Just a few more. I think we'll have the time to take a few, to have all of them answered, I think. Should we expect payment such as payee and VAT deferred by URA? I think you can have a quick answer to that. Should we expect tax payment such as payee and VAT deferred by URA?
Okay, now, as Ernest noted, payment is not going away. My experience has been that when you do ask them to defer, they will accept. They will tell you, okay, but don't forget you have to pay me interest. So if you ask for a 3-month deferral of payment, they'll tell you, okay, you can pay me in June, but for this time you are depriving me of this money, pay me interest. And that interest will be accruing on your ledger. So unfortunately, that is the best you can expect in the circumstances.
Okay.
Yes, and that's really, just to add on to that, that's really what the law, allows them to do. Presumably, some of them may wish to give you more, but I think there are restrictions as to how far they can go. So, in terms of accepting requests for deferment, yes, they are likely to say you can defer, but they will apply. So, one of the other ways of dealing with that
Ernest has left.
Sorry, I think I got disconnected. Apologies. I was saying that they can allow you to have this deferment, but the interest will continue to run. So one of the ways around it is to offer some payments as your cash flow situation improves. So basically, if you said March and you're saying I would like to pay in June, if your situation improves in April or in May, keep making small payments towards the obligation so that you can interfere with the interest that might be accruing otherwise.
Okay.
At a much higher rate. Yes.
All right. Thank you so much. Now, another query is, are donations to the COVID task force taxable? If yes, why? What does government need to do to waive taxes on such transactions?
Okay, and unfortunately, the tax laws have gone to the president for signature without clarification of this point, because the requirement or the provision in the law is to allow a donation to a public exempt person, an exempt organization of a public character. So the question that needs to be asked is, the COVID task force, is it an exempt organization of a public character? Or it is just an arm of government, and whoever is making a donation is actually making a donation to the government? The government is definitely not an exempt organization. So that means that, technically speaking, your donation may not be deductible, which essentially means you pay tax on it, which is an unfortunate situation, which the legislators had a chance to address, but did not. So right now, as we speak, if we go by a strict interpretation, this donation is not deductible, which means it is subject to tax. Okay. Unless if the amendment is done, yeah.
Okay, that's quite unfortunate. The other one is there a tangible benefit from the stamp duty waivers? And maybe I can, yes, just that, yeah, first answer that one, and we see. Maybe use just
no, for stamp duty, I think the the proposals they have brought in the new law will go a very long way, and I think they're very welcome, because essentially they remove 0.5% on the cost of borrowing money, which means that the cost of you getting a loan from a bank, whether business or personal, will be cheaper. That is if the banks don't turn around and again take the advantage to themselves. It comes to you. So that is key. I think it is a very welcome thing, and it will be beneficial for people who need to borrow money to go through this crisis.
Okay. So irrespective of the debate on application to legal mortgages and equity.
Yes.
Okay. There is a query still that are the amendments in a way URA's way of rewriting judgments against them in as far as introduction of withholding tax for insurance and advertising agents? And is this a sustainable regulatory approach?
Of course, what you are stating could be interpreted as such, because the amendment is a direct reaction to a court judgment. And this is not the first time they are doing it. If you go back to the cases against Stalo in the oil industry, if you go back to a decade ago on the cases against Celtel as it was then on airtime, some amendments are always going to come up as a reaction against a court judgment. And that is within their rights. If the taxpayer has taken benefit of a loophole in the law, they will go back and come back and close it. So the thing is, they try to close as many loopholes as possible to collect as much money as possible. Even if we know that one of your rights also as a taxpayer is to pay as little as legally allowable. So those two competing interests are normally balanced out by the legislation. What the law says is what URA will collect only.
Okay, thank you. This query is going to Ernest. The attendee has thanked you for the presentation and is asking, are the judicature mediation rules applicable to tax appeal tribunal? Keeping in mind, tax appeal tribunal is not a court of judicature.
As I recall it, the position previously was that you didn't have mediation provided for in the appeals tribunal, but I think there was an amendment to the Act 2018, I think it was, where that became something that is permissible. I'm not very clear about whether the rules that they are using are exactly the same as the mediation rules used elsewhere, or they are developing or have developed their own. But what I know is that the process tends to follow very much the same process as exists in the mediation rules. TAT, incidentally, is a form of a court. It is not a court of judicature in the context of what I would call the academic discussion, really, but in practice, it is a court. It's like a first instance court, and you go further on appeal from there to the High Court. So the process exists. The rules that are applied may not be too much of an issue in my view. I think what is critical is that there is a process led by the
Sorry, Ernest, we've lost you a bit. We've lost you a bit.
Implemented by the tribunal. Ronald has another view.
Okay, sorry, Ernest, we've lost you a bit, but
hello, can you hear me now?
Yes, we can hear you now.
Can you hear me now?
Yes, we can.
Yes.
Yes, we can.
Yes, I think 2018 or so, that introduced the idea of mediation. And to my mind, the rules that are applicable, whether other rules developed by the tribunal, I think the more is not too much of a serious issue. I think the more important issue is to see to it that one can take advantage of the mediation process. It is initiated by the tribunal, it's controlled by the tribunal, it is led by, the tribunal. But what was critical is to be aware that it exists and that it affords an opportunity for the parties to have another go at a discussion to resolve their issue.
All right. Thank you so much. We have actually almost come to the end of our, but just one more query, and then we wind up. It's a follow-up to the one on COVID tax force taxable. Can these donation, can you issue a practice notice making them deductible, and would that be a solution to what was not put in the law?
I think that would be difficult because essentially a practice note cannot amend an act of parliament.
Okay.
So the best way to do it, the best and easiest way to do it would be to pass legislation amending that provision, remembering that tax legislation can also apply retrospectively.
All right. All right. Thank you so much, Ronald and Ernest, for the presentation. Thank you so much for attending. The last query was not more of a question. It was asking if we'll be able to share the webinar. Yes, we shall be able to share it. We have your contact. You will receive it from us. Thank you, and have a wonderful rest of the day.
Thank you very much.
Welcome.
Bye.
Keep well.
Okay, bye-bye.
Bye.